Well, this is going to be one hell of a crazy week of catalysts. There are two types of catalysts we've got to pay attention to this week. Number one, we already know it, jobs. Number two, Donnie T. Markets right now enthusiastic because Donald Trump is going to meet with Democrats. The meeting is supposed to hold or take place at noon California time, which means the market will really be closed before we actually get updates from Trump. However, this creates a short-term risk factor because if Donald Trump sandbags this meeting, we'll hear about it after the market is closed. I expect markets to temporarily sell off because the likelihood of a government shutdown occurring will skyrocket if this meeting goes poorly. Now, there are two ways for Trump to go here. One way Donald Trump can go is Donald Trump could say, hey, you know, we're gonna, we had a great negotiation. We've got, you know, a framework of a deal. We're just waiting on signatures. Markets will probably rocket on that. People will love that. The other way it'll go, which I actually think is more likely, is Donald Trump will come out and say something like, well, I tried to meet him, but the Democrats, all they want to do is spend, spend, spend. It's like Russia, Russia, Russia. That's all they want to do. And so you'll get some kind of bashing of the Dems. And tomorrow is the last day of September. The government shutdown is set for midnight tomorrow night, which would be October 1st at midnight. So if we get bad news in the second half of the day today, that's going to get priced into markets tomorrow and will probably be down until the government shutdown is resolved. Now, usually government shutdowns are a fantastic buy the dip opportunity. Notice that we have about a 63% chance of a shutdown priced in on Poly Market by October 1st. That rises to about 75% if you go look at the whole year. The bigger issue, though, what matters so much more is actually what the Treasury market is paying attention to this week. If you think about a government shutdown, you should be thinking, oh, well, you know, our debt expense is going to go up. That's going to be bad for bonds, right? Yeah. But then why are bonds up today? Mind you, bond yields trade in inverse to their price. So when bond yields are down, bond values are up, right? Okay, you know that. So anyway, bond yields down today. Why are they down today? In my opinion, it has to do with the most critical second catalyst, jobs. Okay, this is absolutely everything we're talking about. We talked about this in the Alpha Report this morning. We talked about it in the Alpha Report last week. We'll be strategizing and playing A/B scenarios with course members tomorrow, especially because that'll be the eve of ADP, and we'll do that again on Thursday on the eve of the BLS data. But here are the catalysts that you got to pay attention to. So tomorrow we are going to get jolts at 7 a.m. So the market will be open. We'll get jolts data. Usually this is a nothing burger. This is the job opening labor turnover survey. Usually a nothing burger. We're looking at 7.2 million jobs, which is roughly in line with the 7,181 we got previously. Nothing burger, not a big deal. Not worried at all about jolts. Really, again, the biggest catalyst over the next 24 hours is just what happens with Trump in this meeting. I gave my opinion in the course member live stream, but you know which way it's going to break. So keep in mind, and just briefly, if you did not see the Washington Post piece last week, it gives you the Donald Trump Vought playbook. The Donald Trump Vought playbook is, hey, we want to shrink the size of government. And this is where a lot of Americans look and go, yeah, I mean, that's what I voted for. I want smaller government. I don't want, more big government. I had my mastermind this weekend, and Ross Gerber was so generous to come visit and let us host it at his office. Shout out, Ross. Thank you. He had such a, there was one moment where he's like, remember what Donald Trump's POV is. Fire all the ARS agents. Donald Trump is sick of getting audited. And so are a lot of wealthier Americans. So you go start firing the IRS agents. That's part of the MO of the Trump admin. So, in my opinion, that increases the odds of a government shutdown, right? That moves then the catalyst to, can the job market save us? And there's a trend that we're on, obviously, that you know about. Not only the 6-month unemployed data or some of the longer term issues, but there's a trend in the actual data that we're going to be getting this week as well. So let's talk about that. Mind you, as this happens frequently, but this weekend I think I got like 4 emails of people that are like, Kevin, I'm trying to sign up for the course, but I can't. It says the price is like, like many thousands of dollars or whatever. And I'm like, yeah, the coupon expired. And so I was getting so many emails. I'm like, all right. So I just briefly extended it. This happens every single time, it feels like, when there's an expiration, but like, I need to change the price and I need to raise it. So we'll do that. But right now I did extend Daddy's back a little bit. But there was actually one person, they emailed, they're like, I can't sign up, the price isn't matched. And then they got like an automatic reply, hey, you left something in your cart? And they replied back to that and they're like, dude, I know, I'm trying to get the coupon. And I'm like, bro, it expired. They're like, anyway, I felt bad, so I extended it for him. But anyway, okay, so here's the data, okay? So ADP, October 1st, this is Wednesday. This is technically first day of government shutdown. I think it's gonna happen. First day of government shutdown, and we're looking at 50,000 for ADP. This is actually roughly in line with what we had last time. We had 54,000 last time. So 54,000 or 50,000, this is good. If we could get that on the private survey, hey, that's fantastic. I'm a big fan. That would be wonderful. No big issues here. I don't know that ADP is going to be our weakness this week. Something that you can do, and this is a spoiler, if you want to have an idea of how the job numbers are going to come out this week, you need to watch what Donald Trump truths. I think Donald Trump gets heads up insight into the job numbers, and usually when the numbers are going to be bad, Donald Trump starts bitching about it before the numbers actually come out. I'll obviously be covering the numbers live and everything, but that that's my assumption. So then what we have, that's the private labor report. If that rolls over, it's a really big issue because it's our private survey. It comes from an actual payrolls company. And if that rolls over, it's going to be weird because, last month we popped back up and we're waiting for this job data to really confirm a soft landing. To me, this is a big moment because our jobs trends have been reset way low. And we're like, the trend has basically done this. Beep. We're only creating 29,000 BLS jobs on average over the last 3 months. That's horrible. Over the last 4 months, I think we're at like 35K. Horrible. As J-Pal says, we're below the break-even rate. It's a bad trend. The question is, did we just adjust down because of immigration? And now we're going to kind of go flat and kind of right up again. This week is a huge moment to tell us, is the fall stopping? It's not to guarantee soft landings in the bag, everything's fine. It's to give us faith that the crash of jobs is stopping. That's why this week is so critical. Now, the BLS jobs data, that we actually get on Friday, which before that we'll get the ISMs. We'll get ISM manufacturing prices paid new orders on Wednesday. Big deal. People take that for what it's worth. You've got initial jobless claims expecting to be relatively benign again, 225. This has been what jobless claims have been for a very, very long period of time. Wow. Hold on a sec. I just saw Robinhood absolutely crushing it here, up 7% today. Really incredible enthusiasm here. I mean, honestly, a lot of their sports betting stuff hasn't even been priced in. We actually did a bit of a fundamental analysis on Robinhood this morning. We have a tab in the course member stream. You can't see these tabs unless you're a course member, but we have a new stock tab, and we put our fundamental analysis on here, and this goes down and I link my research and all this sort of stuff, but it automatically shows you like the price and Kevin's peg ratio, so like where Kevin thinks the peg is going versus like a public market peg. It's kind of a cool new feature we added for course members, and so like every day as we're doing fundamental analysis, we're adding to it. It's so cool. I love technology. I always just nerd out over it. Anyway, about the BLS data. So BLS, we are looking for a Friday payrolls report of 50,000. Now remember, the prior read was 22,000. Now we're looking at 50,000. Let's see how many surveys we have on that. We have 58 estimates. So this is a pretty big survey right now. We have 58 estimates. The lowest estimate is negative 20,000. There is only one economist that thinks we're going to go negative. Only one. So this explains why the market is moving the way it is. The vast majority of banks and institutions think we are going to get a positive labor report. So the odds of us getting, based on number of economists, the odds of us getting a negative labor report, very, very low. Like, it's not going to happen. I'll show you the standard deviation chart here in a moment. Standard deviation is set to come in at 23.39. Okay, so we're looking at an average estimate of 55.4 minus 23.39, which means even if we had a miss of 2 standard deviations, which, you know, puts us at what, like a 5% chance or whatever, or to one side would be, I guess, be a 2.5% chance off the top of my head here. You know, 2.5% chance, I guess, of missing 2 standard deviations. So, well, yeah, I mean, I guess you can miss 2 standard deviations either way. So call it a 5% chance of that, of missing by 2 standard deviations. You're still positive. So the trade this week is going to be around, are people's expectations going to be right or wrong that we're going to be so positive? This is the distribution of estimates. I'm actually covering up the one guy who's so negative. Look at this. There's the one guy that's like super negative over here. And as you can see, almost all of the estimates are that we're going to get a rebound. There's our average right here. This is the median right here. And you can see there are a lot of estimates here. 75,000, 80, 85, 90, 95, 100, 110. Like, the base case here from markets, I'm going to close this door. Base case from markets is we are going up with jobs. And so think about what that means for a moment. That means one of the reasons why we're seeing as much market enthusiasm as we are right now is because the bankers and the economists are like, no, you don't need to be worried. Everything is fine. So let's write that down. Let's go pop that into here. So consensus is rebound and a beat above the 3-month average of 29K and beat above 4-month average of about 35K, right? So this is very, very clear. Like the up, this means it's probably already, to some extent, we already been priced. Suggest to some extent, some of this enthusiasm is already priced in. What's really not priced in here is a miss to the downside. Broadly, market's enthused, except for this one guy over here. That one guy, one person. All right, well, I mean, they should buy some lottery tickets if they're right. But yeah, I mean, that's this week. This is a critical week, more so than last week. Last week was like, we got a little bit of Fed speak, and honestly, we had nothing around that Fed speak. This is huge. In addition, we'll get S&P numbers on the 3rd. We'll get ISM services on the 3rd. But this is jobs week, hands down. You will get challenger job cuts on Thursday. Challenger job cuts. Nobody pays attention to that. Like, nobody cares. So tomorrow, JOLTS, ADP Wednesday, Challenger Thursday, Jobs Friday. Mix into that some S&P, ISM numbers and PMI numbers, and yay, that's the week. But boy, looking at that chart, seeing the consensus of pricing, dang, I can actually throw up the caddies. I think, yeah, there we go. Look at this, JOLTS. What is that? JOLTS. Job openings, yep, that gives you the job openings number. ADP, 50K, yep. ISM, whatever, jobless claims, 223, whatever. 50 right here on non-farm payrolls. I mean, that's cute. Cute little catalyst window we can kind of throw up while we're doing vids. So yeah, I mean, this is a big deal this week. And I get it. There's a lot of enthusiasm, in part because look at what the consensus is. Now, one of the ones that's really winning today is Nvidia, in addition to Robinhood. Robinhood is just absolutely dominating right now. Valuations obviously stretched, but people are so excited about the products. And I actually think, I don't want to get too much into what we talked about with the alphabet this morning, but let's just put it this way. Some of the new stuff they have coming, it hasn't shown up in the earnings reports yet. Just saying. That's when we do our fundamental analysis. We go into the actual financial statements and we're like, oh, this is still coming. But anyway, Nvidia really popping off here. Nvidia you have to think of as your boom time stock. It's one of the reasons I haven't personally sold off my Nvidia shares. I have a ton of Nvidia shares. And what's really remarkable, and I bought these back in like September. My statement says September of 2022, and we sent out a course member alert for that back then, of course. And I'm gonna send an alert when I sell Nvidia. But like I feel like I'm a hair trigger on selling Nvidia, because if we go into a recession, Nvidia is gonna tank, and I got so many freaking tendies. I want the tendies. I want the chicken tenders. I want to have some food. But Nvidia is kind of a call option on the boom continuing. Think about that phrase there for a moment. Nvidia as a call option on American GDP. They're the most insane pricing power business you could ever think of, bringing over 50% to the bottom line. 72 cents of every dollar is gross profit, bro. Like, they don't even make the damn chips, dude. They're kind of just like if I could summarize Nvidia to my child, okay? If I asked Jack, maybe next time I ask him, I go, Jack, what do you think Nvidia does? He'd be like, oh, they make really good, graphic cards. And I'd be like, wrong. You have to match your subject to your verb. Who knows what that's from? No, what they're really like is kind of like this. Oh, you guys need graphic cards? All right, hold on. Hey, Taiwan, we need graphic cards. Ship them over. They get shipped over. We got your graphic cards. Here you go. And the other people are like, thanks. And Nvidia's like, I'll take 50% to the bottom line. Thank you very much. Like, dude, that's insane pricing power. Now, obviously, I'm being a little facetious here because we have an incredible software infrastructure around these chips, CUDA. We have incredible, I think Nvidia is an ADAS play, right? Like, I think they're the next Tesla FSD play. Tesla obviously has the robotaxi and Elon factor. But ADAS at Nvidia is a huge play. That is really not priced in at all. And then, of course, again, I'm not trying to minimize what Nvidia does, but they don't make the chips. So it's really incredible. And to me, that's your upside hedge is Nvidia. And your downside hedge, to some extent, are stocks that should do well in a lower interest rate regime. And is something that you're trying to play out over the next 10 years. So that's why we have 10 stocks to buy in the next 10 years, not as like a personal advice thing, but as a way to say like, hey, look, I'm going to hold on to these upside hedges like Nvidia for now. But, do I really want to buy Nvidia now? I don't know. Probably want to buy others just in case jobs roll over. But maybe not. I really hope that this week jobs do not roll over, because jobs rolling over are going to be so painful for people. And nobody is prepared to lose their job. In my opinion, people are throwing money into the stock market at margin. Margin is at mega all-time highs, way surpassing the 2021 cap. And mind you, not only are we passing margin levels that we saw in 2021, we're not even counting the debt that's artificial, built into leveraged ETFs. So when you look at like a 2x or 3x ETF, that doesn't show up in margin statistics. So, like, how much debt is there really propping up this economy? All of it. Yes. How much debt would you like, sir? Yes. That's scary. So, you know, so Cody here says, if shutdown, no BLS report. Yeah. Okay, there is some talk that we might not get a labor report because of the shutdown. I actually didn't bring that up because I think it's bullshit. Like, the way the government operates during a shutdown is the people keep working at the government. They just don't get paid. So the poor souls have to show up and do their job and not get paid, and they have to wait for, you know, politicians to figure out how to give them their freaking money, and then they get their money. But typically, we continue to see the services of the government perform to some extent. You know, national parks and some museums like the Smithsonian's and that, they shut down. But yeah, I mean, is it possible that Donald Trump directs the BLS not to release the labor report? Well, that tells you all you need to know, though. Because remember how I said, I started this out by saying, pay attention to Trump. If Trump sandbags the BLS report, it's because he already knows that it's going to be bad. And that's, the market's not ready for that. The market's pricing in a good BLS report. Not having the report, though, generally is bad because it removes transparency and it heightens uncertainty. It's going to take a lot of those bullish economists and potentially turn them bearish to some extent. So you've definitely got some buy the dip opportunities over this next week here, you know. So yeah, that's all related here to BLS jobs, all related to catalysts for the week. So that's it. That's fantastic. That's really, really good information to know, in my opinion. Remember, we did do a brief extension on Daddy's Back, the coupon code at meetkevin.com. So if you haven't yet, go to meetkevin.com, realize what you get. You get, we got Trumponomics lectures coming out really soon, by the way. Those are included. So if you get the Meet Kevin membership, trying to see if I can pop it up on screen here. If you grab the Meet Kevin membership, you not only get all 8 courses with all the new lectures coming out, mind you, but you get every trade alert, you get every private live stream, you get every alpha report, and it might even be tax deductible. Most people write it off on their taxes. So anyway, very cool. So go check that out over at meetkevin.com.
Knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.